One time I heard through the grapevine that someone didn't want to open up an account at a credit union because credit unions are not insured by the FDIC and therefore unsafe. While that person is not necessarily wrong, credit unions are not insured by the FDIC, I think their fear of credit unions is just a bit misplaced. Nearly all credit unions, including us, are insured by the NCUA or National Credit Union Administration. Hi, I'm Dani from FCCU, and today we're going to learn all about deposit/share insurance. Woo! So share/deposit insurance is one of those things that as an adult you should learn about, but you put it off because it's super boring. But I promise today I'm going to keep it as interesting as possible because it is very important to learn. So both the NCUA and the FDIC are independent agencies of the US government that regulate, charter, and supervise depository institutions. The FDIC insures banks and thrift institutions with deposit insurance, and the NCUA insures credit unions with share insurance. If you don't know the difference between a credit union and a bank, be sure to check out our video in the description after this one. Deposit insurance is a measure to protect bank depositors in full or in part from losses caused by a bank's inability to pay its debts when due. So share insurance is practically the same thing, but for credit unions. Oh, this is kind of fun. We're in the dark. Should we just keep going? The light will turn on at some point if I gesture large enough. Essentially, share/deposit insurance gives you peace of mind that when you go to a financial institution and deposit money, you can just as easily turn around and withdraw it, depending on the type of account, of course. You may recognize these little logos in the bottom of financial institution advertisements and content. In fact, the NCUA logo popped up at the beginning of this video and you probably didn't even notice. This logo states that your savings are federally insured up to $250,000 and backed by the full faith and credit of the United States government. Now, if we get down to the nitty-gritty details, different types of account categories have a different amount of coverage based on the number of owners, beneficiaries, participants, etc. Here's a table that summarizes the account categories that are insured and the applicable coverage for each. While many share/deposit accounts are insured by either the NCUA or FDIC, there are a few that are not covered. Here's a table of qualified accounts. Look at them, read them, embrace them. And here's a table of non-qualified accounts. Luckily, mycreditunion.gov has a nifty NCUA share insurance estimator tool, say that 5 times fast, that can help you evaluate your personal financial situation. Of course, link in the description. Bottom line, is your money safe at a credit union? I would say yeah. I mean, just check for that NCUA coverage.
For legal reasons, I should mention that the word safe is a subjective word and that you should look at your personal financial situation against the stipulations of NCUA share insurance, and then only then can you personally decide if that makes you feel safe.
Anyways, I've been Dani from FCCU. Be sure to like this video, like us on Facebook, subscribe to us on YouTube, follow us on Instagram, and we'll see you next time. Nearly all credit unions, including us, are insured by the NCUA or National Credit Union Administration. Is it association? What? We're gonna find out. Looking up on computer, NCUA. It's administration. Confirmed. Nearly all credit unions are insured by the NCUA or National Credit Union Administration. Or National Credit Union Association. Administration. It's administration.